And welcome to another Round the Rotary with me, your host, J.P. Warren. And with us today, we got a kind of old buddy of mine that I haven't seen in, what has it been, 2 years now?
Too long.
It has been too long, but it's been about 2 years now.
That's right.
Or something like that.
Yep.
So we got Preston Peeples with us today, and Preston Peeples is the VP of Engineering over at Momentum Minerals. Is that right?
That is correct.
I know, it's kind of weird talking on these headphones starting off, isn't it?
It is.
Is this your first podcast you've done?
Absolutely.
I feel like it's mine. Every time I do one, I feel like it's my first one.
Well, it's good. It keeps you excited.
Yeah, exciting, nervous, anxious, stressed.
Perfect.
So anyway, Preston, why don't we do what we normally do? Just get us kicked off, give us your background, where you're from,
Sure.
how you got in the oil field, all that fun stuff.
Sure. Okay. We'll go back to the way beginning. Grew up in Houston, Texas.
What part of Houston?
Memorial area.
All right.
Went to Memorial High School.
What group in high school did you fit in with?
Super cool.
Okay. Just like me.
Yeah.
But I grew up in Connecticut.
Kind of upper echelon.
I get it.
I would say. No, actually, I'm kidding.
Like
Not
an
at all.
influencer before they were influencers.
Yeah, so I played golf in high school, so
Okay.
it probably gives you a pretty good idea of where I kind of fell.
Athlete.
In the total, yeah, exactly. But now, I mean, as far as like oil and gas growing up, my grandfather was a geologist. Other than that, really didn't have a whole lot of exposure other than living in Houston and kind of being in the center of the.
Was your dad in the oil field too?
No,
Oh, so it kind of skipped a generation.
skipped a generation. Grandfather was a geologist, and going into college, really thinking about oil and gas, wasn't thinking about it at all.
Yeah.
So ended up, going to the University of Texas. Started out as an economics major, kind of trying to move my way into the business school.
All right.
And
So what did you want to do?
I had no idea.
You just one of those things.
Yeah,
Yeah, I'll just pick this.
Business. I
Yeah.
guess I can do so much stuff with a business degree.
Business sounds extremely important.
Yeah,
Yeah.
absolutely.
It kind of that's my motivation.
I
as
just,
well.
I wanted a BBA, right? It just sounded good.
BBA.
Yeah.
Marketing. Yeah.
So summer after my freshman year, definitely was required of me and my brothers, thankfully, to go earn some money. And summer after my freshman year, at that time, great way to go earn money was go work offshore. Roustabout, roughneck type.
So how?
Yeah.
I feel like you're kind of missing this step because most people way to earn money is probably grab like a internship at DQ or like Deloitte Touche, something like that. So how did you even think about pursuing?
Yeah. So, I mean, after freshman year, it's not like you have enough experience to do some sort of like structured internship through the school.
Right.
It's more of like raw, hey, go out and make money any kind of way you can.
Right.
And my parents and family, knew some folks that were in the offshore business, and they were happy to entertain a, roustabout or roughneck job offshore. And my oldest brother started doing it. Little brother did too. Came down to me.
So you have three brothers?
Two
brothers?
Two older brothers. Three of us total. Yeah.
And their names?
William and Andrew.
Okay.
And I'm Preston.
So WAP.
That's correct.
Wings and pizza.
That's right.
Okay.
Yeah.
All right, keep going.
Yeah, you put that together nicely.
We discussed that before.
And went offshore, was interning for Hercules offshore at the time,
Oh.
working 2 weeks on, 2 weeks off hitches, needling the rust off handrails and staircases,
Yeah.
and every now and then grabbing the tongs, doing different stuff like that, putting trash in dumpsters, riding the crane basket, all sorts of stuff.
Which is so far away from
Oh my gosh.
the business school.
No, so far.
Yeah.
So far, it was manual labor, but I wasn't a manual labor type person at the
Right.
time.
Golf, I get it. No, but did you enjoy it?
Other than being a stellar athlete, yeah. Otherwise, I really it was pretty
Varsity.
foreign. Yeah, totally. 4 years later.
Was it? Did you enjoy it?
I did, and I enjoyed meeting the characters.
Yeah.
I think that's an inappropriate word. Of people that were out there that were just hardworking, and honestly, they had their kind of hazing attributes of a newer kid coming on board, and
The skyhook, the keys to the V door, all that fun. Emissions.
fell flat on my
Air
face
samples.
for all that stuff. But after a week and a half, these guys, ended up liking me.
Mhm.
I did. And at the time was making, I can't remember what it was exactly, but it was maybe $18 an hour. But then you were also earning overtime. So like as a freshman out of college, after doing 4 weeks of that and earning overtime, I had more money than I'd ever seen.
Right.
And kind kind of the whole environment and the people out there, you know, was just super interesting. It was such a foreign, kind of vague experience that I had just gone through. And the Shale Revolution, this was in 2007.
Were you working on a jack-up?
It was a jack-up rig and offshore. It was one hitch. They were drilling a well, setting casing, and then moved off that one and actually did the whole, like, the move where you jack it down, get on the tugboat, go to another location. So
which is a cool experience.
It was super cool.
Yeah.
It was super cool. And so came back on campus, the Barnett Shale and other kind of tight gas plays that Aubrey had, you know, gotten all these things, and it started to be a big deal. Petroleum engineers you hear on campus are getting hired, you know, with six-figure jobs easily.
Right.
Obviously, that's a pretty attractive thing to hear.
Yeah.
Math and science, pretty good at both of them. Had this experience offshore, came back, went to the petroleum engineering department, and started to, you know, entertain a transfer into the engineering school. Eventually ended up getting in, so departed from, you know, going to get the shiny BBA to go to get a BS. Yeah. So kind of total paradigm shift, but was comfortable with it, was excited about it. It was grueling. It was a lot harder than any other direction I thought I was ever going to take.
So the main motivator was probably the sign-on bonus or whatever it was, the salary.
Absolutely.
Yeah. Okay.
Absolutely.
Okay.
And I'd be kidding you to tell you anything otherwise.
I mean, yeah, a lot of people pursue this because of that.
Absolutely.
Or they did.
Yeah, sure. And I mean, it was just it was a booming kind of innovative, you know, part of the economy at the time, and it was super exciting. And being from Texas and being from Houston, I knew that if I did land a job, most likely it'd be like back in my hometown,
right?
Which was also super attractive to the whole deal. So ended up doing that. Had several internships throughout the way, and ended up landing a job in Newfield. I did not come back to Houston originally. First hitch with Newfield was being shipped down to Eagle Pass, Texas.
So you were actually so when you got hired on Newfield, what was your role?
I was basically like a field engineer, field operator.
Okay.
So went down there, and my initial job, honestly, was like the role of a police operator or a pumper.
Okay.
I had, you know, a set number of wells that I was responsible for and reporting daily production on, and calling the engineers in the office and saying, hey, this well's down. This is why I think why, you know, this and that. So it was really cool to kind of start kind of at that part of the totem pole, speak to engineers in Houston, and eventually get back to Houston and start working that.
So do you enjoy? So you enjoyed that working in the field? I mean, obviously it's such a departure from the business mindset of,
for sure.
You know, you graduate from getting your business degree.
Yeah.
You get that suit. You get the high rise downtown New York City, wherever that is.
Yeah.
Now you're actually reporting on wells.
Yep.
As a pumper.
And it was actually the first year that OSHA started requiring fire retardant clothing.
Okay.
So I moved there in July. Eagle Pass, Texas. I don't know if you know about the climate down in Eagle Pass in July.
Tepid.
Moderate.
Moderate to tepid. Okay.
So yeah, wearing, you know, 30-pound blue jeans and a 20-pound shirt, you know, going around well to well, you know, working in that environment was, at first, obviously you go down there, you're like, this kind of sucks.
Yeah. What am I doing?
What are you doing? But at the same time, you know, you get into it and you start realizing how valuable of an experience it's going to be. You start becoming one with kind of the fuel crew, the people that are working down there. They accept you and all that good stuff, and it was incredibly rewarding. And I was down there for probably 10 months. It was kind of initially going to be it was loosely like a 12, 16-month assignment.
Okay.
I was down there around 10 months, and then our Houston office at Newfield started the operations for the Bakken started to come down to the Houston office.
Okay.
They were also operating the Eagle Ford, which I was, you know, kind of in the middle of. And so they needed more kind of young engineers, capacity. They weren't in really hiring season out of college, or kind of, you know, first year, second year, Newfielders already were in their position. So I was with another young engineer down in the field from LSU, Gavin.
Yeah, and Broussard, if you're listening,
yeah.
We love and miss you, brother.
Yeah, totally.
Hope all's well.
Totally. Good times down in Eagle Pass, too. That maybe we'll save it for another podcast.
That might be,
Good stuff.
Yeah.
And so came back to Houston and started working more of in a completions engineering role, working kind of Eagle Ford and Bakken both. I mean, the office in Houston was originally working Eagle Ford completion, so it was kind of taking a lot of the Eagle Ford learnings, applying to the Bakken a little bit. Kind of two totally different beasts.
So were you just kind of like shoved, not shoved, but placed into completions, or was that just something that you were like, oh, this looks interesting, or I mean, how did that work out?
It was a little bit of a shove, but at the same time, I was very receptive to the shove.
Okay.
It was, hey, you're moving back to Houston.
Yeah.
It's a bit of a promotion on a couple different fronts. You're living in the city now, which I'm a city boy from here. That
Right.
was attractive to me. Come back and kind of, because you're right. I mean, I was mainly doing production stuff. So came back and started doing completion stuff. Had a couple great mentors and a boss. Ended up being in that group for about 3 years.
Okay.
Ended up, ultimately at the end of it, completions being responsible for 2 frac crews in North Dakota. Traveled up there quite a bit, and the December, January months, and also July and August, the hot months and the freezing cold months in North Dakota. Never been to North Dakota in my life, and I never thought I'd ever go there.
Right.
But at the time, like going up there and just meeting the people at the time of 2011, 12, 13, where it was just an absolute booming economy and state. The traffic on the roadways was insane with 18-wheelers with sand trucks.
You know what's funny? You hear about, like, at least I hear about,
Yeah.
I mean, obviously other people have different, avenues out there, but you hear about, West Texas booming, or, the Haynesville time when that was booming. I mean,
Sure.
you don't really hear about North Dakota, like, when it was booming. What was that like?
Oh my gosh. I mean, so it's a little bit of a different perspective because I'm not from North Dakota, never had been there prior to it booming. So
Right.
I didn't know quite like how different is this than it was before. Because North Dakota and Montana have always had kind of oil and gas.
Right.
But as far as the horizontal drilling and the Bakken, really started to pick up in a little bit before 2010, and then really started to pick up 2011, 12, 13 when the oil price was spiking pretty huge. And but being down in the Eagle Ford, which is where I kind of lived in my first part of Newfield, very similar, except I feel like North Dakota even had less infrastructure than the Eagle Ford did. So the Eagle Ford, I mean, yeah, it's very remote and rural, but there's a bunch of ranches down there where nice highways are built and
Yeah.
infrastructure's decent. North Dakota was very, very rugged.
Okay.
And even more rural for me when I went up there.
Now, people are, this is my personal question. I mean, people from North Dakota, were they primarily from North Dakota, or were they actually, do people come in from all over to work the oil field?
So most of obviously being in operations and completions, I was, working a lot with the on-site consultants
Yeah.
and service crews and stuff like that. A lot of them were from Colorado.
Okay.
So obviously in Colorado, I've had oil and gas conventional production for the longest time, being in whether it be the Piceance or DJ, vertical drilling for a long time. So I feel like a lot of Grand Junction, Colorado, a little bit of Wyoming, folks really kind of migrated there for kind of the boom as far as being more the consultants and stuff.
Okay.
So it was kind of that Colorado, Montana, Wyoming, North Dakota all combined, but I would say probably the majority of people I met up there were Grand Junction, Wyoming.
So that wasn't a bad observation. So go on. So you go up to North Dakota.
Yeah, so go up to North Dakota, worked there for quite some time doing completions. Eventually talked to my boss about just kind of getting a different disciplined experience.
Why is that? Were you
Within-
tired of completions, or you just kind of wanted to kind of expand your resume?
Exactly. Not tired of it, but and I think things have changed now. But as far as you complete a well, how it used to be or how it was in Newfield at the time,
Right.
you completed a well, you moved on to the next pad, and you didn't really stay with those wells and what they were doing or follow them or take care of them. I think these days, completion and production have combined a bunch where you complete a well and then it's yours for however long you work there.
Okay.
So I didn't really like that. I wanted to stay with those wells I just completed. How are they doing? I'm always
Yeah.
finding myself talking to the production engineers, hey, how are those wells performing? Was that a good completion? This and that.
It's like your little foster wells.
Exactly.
Yeah,
Kind
you
of move
care
on to the
about
next
them.
one.
You miss them.
Yeah, so I
How they doing?
kind of was moving along the well life cycle.
Okay.
I completed it, and then I kind of wanted to go to production and take care of it.
Okay.
Kind of like you described. And so that was a lot of fun. You learn a lot about the downhole, and then also as far as tracking LOE and operating expenditures. You're getting a lot more of how the economics of the well are playing out.
Okay.
So on the completion side, yeah, you're upfront capital, you spend it, and then you leave and you go to the next one. But with production, you're really kind of living with it, and you're trying to knock down the LOE as much as possible, you're trying to optimize rates, you're trying to get that margin as big as possible.
Okay.
So it's kind of a different angle of attack.
There's a business side to it that's not, okay.
There's more of a business side to it, in my opinion. Some people may disagree. But, and then that kind of led me to wanting to be like, this is fun, getting another angle and another discipline. I kind of want more and more and more. And, you know, Newfield at the time wasn't a huge company. We had a regional office in Houston, felt almost like a private shop where we were.
Where in Houston?
Greenspoint.
Okay.
And so that leads me into my next job. So, you know, kind of got connected with someone that I'd known from college that had started up kind of a private shop. It was middle of 2015, so February we had layoffs, survived.
Okay.
Got to May, June, there were talks of more layoffs, you know, still was surviving, had a job, happy to be there. Got word that, you know, the office was going to shut down in Greenspoint, we're going to move to the Woodlands. You know,
I remember that, yeah.
So I
Because the reason why I asked where the office was, because we used to office in the same office together.
That's right.
I was like
363.
Yeah, 3 floors down or something like
That's
that.
right.
You know, yeah,
I'll
when I was
never,
at Penn
never,
State.
never forget 363.
That's right.
It's OG Newfield office.
That's right.
Everyone in Newfield knows that.
A lot of history there too. That's old school Houston.
It is, absolutely. And so the offices were moving to the Woodlands, still happy to have a job, happy to make the round trip every day if I needed to.
Did you hear Jimmy G's is closing, by the way?
Are you serious?
Yeah, it is. I
Well,
guess
Greenspoint doesn't have anything anymore.
Green, might as well just, it's done. Bulldoze. It's done.
Bulldoze. It's
Yeah.
done. It's done.
Anyway, getting back to your background, I just want to drop that Jimmy
Yeah.
G's is an oil field staple
Right.
for decades and decades. Is finally, I guess COVID got him.
That's correct.
Closed
Yeah.
down.
And to all of y'all, you know, the background of going to lunch with JP and being part of the Newfield OG crew was a big part of my week, every week.
That was kind of when I first got into sales.
Yeah.
Yeah. So, anyway, continue. So, there's talk about going to Woodlands.
Yep. And kind of got connected with, you know, someone I kind of knew in college was a bit older than me, but was also working with, you know, a couple guys that were mutual friends with my brothers. And eventually we saw each other basically like a wedding reception or something. Got to talking, hey, petroleum engineering, I'm working for Newfield. Oh, I just started working at this, you know, private backed company.
Right.
You know, we're looking to hire an operations engineer, but it's kind of like operations, but also whatever we need you to do, you're going to do.
You're
You
the
know,
engineer.
We're a 15-person, 20-person shop.
Okay.
You don't just get siloed and do this. You're going to have exposure to a lot of stuff. And I was like, well, that sounds pretty interesting.
Yeah.
I'd love to, you know, talk to you about it, or you know, have a chance to come interview or whatever. We're kind of in this big transition mode at Newfield where I don't really know what's going on. At a big public company like that, you know, you kind of know what's going on regionally, but in a big corporate with acquisition, an acquisition can be made, and you will have.
And that's completely out of your scope. Did you have any indication of like what was going on,
No.
whether people can use? I mean, okay, so it was
No.
one of those things where it's like,
When
I don't
it-
know what's going to happen tomorrow.
When an acquisition was made, the people in the public space knew about it at the same time that an employee knows about it. And that's
Yeah.
just how it has to operate though with, you know, SEC and trading
Yeah.
and being a public company. That's how it has to work, and that's fine. Of course, I didn't really like that at all. So got this opportunity, Encino Energy, hired on with him July 2015. Started out, you know, predominantly in an operations role doing production and completion stuff. We were drilling Cleveland wells in Texas Panhandle. We were drilling this formation called the Cottage Grove in western Oklahoma. Still staying pretty active even in a, you know, lower commodity price environment. It was fun. Eventually dropped rigs, so there wasn't a ton of operations, you know, engineering going on other than production and you know, cost cutting and LOE and all
Right.
that stuff. But that kind of led me into having an opportunity to do more asset management, reservoir work, you know, keeping track of the portfolio, building the database.
Without any reservoir, did you have any reservoir knowledge before that?
I did through, I mean, at Newfield working in completions, you work hand in hand with reservoir.
Okay.
Because you're both trying to optimize the completion of the well, but you're also trying to optimize the NPV and rate of return and make sure that what we're getting reserves-wise makes sense with what we're spending capital-wise.
So you kind of had some
Sure.
understanding, because I was going to say, I mean, going from, you know, production to completions, and suddenly you're at this company as a sole engineer and you have to
Right.
do reservoir.
Right.
Reservoir.
Reservoir.
Yeah.
It's like finance. Finance.
Yeah. Yeah.
And
Data.
yeah, so it's more, I mean, Aries, the big software, reservoir engineering software. It's
Okay.
something that I didn't have an experience in. I started to get a lot of experience in it at Encino. And if you want to be a reservoir engineer anywhere, Aries is basically number one. You know, you got to have that experience. You got to know the software. You can't go anywhere.
I've been saying that since day one on this podcast.
Yeah.
So anyway,
So you're welcome.
thank you.
And so I just started to get a lot of exposure to different things, and then obviously when we stopped drilling and activity, you know, really ramped down, we were kind of in this weird lull, but fortunately we were private, we could be more nimble and kind of change strategies how we wanted. We were going to go out and raise money and, you know, go buy something in this low commodity price environment, capitalize on something that either a public company just can't handle anymore, or, you know, these companies that are distressed or in debt, 2015, go pick up for cheap. So started to get more on the evaluation side. And my operations experience, you know, helped a lot in me being, you know, a good evaluation engineer, because I'd look at LOS statements, I'd look at capital, I'd look at, you know, the drill schedule and see, you know, what's realistic in the development of this asset that we're looking at. And having a good operations base is key in my mind for being a good evaluations reservoir engineer.
Did you like going to those
Data rooms?
The data rooms, yeah.
No.
Really?
Well, I did in a sense, because there was one our chief technical officer at Encino, when we would go to those things, we just absolutely roast the bankers
Okay.
in these deals, because the type curves were crazy, spacing wasn't taken into consideration, the development plan was, yeah, you can ramp up 5 rigs, you can go negative free cash flow by hundreds of $1 million, but this is going to be great. And so that was entertaining in itself, but I mean, it was good, because at that moment in time I had exposure to Eagle Ford, Williston, and kind of, you know, Western Oklahoma, Texas Panhandle, conventional, and we were basin agnostic. We were going to data rooms looking at any basin anywhere. So Haynesville, Marcellus, started to get exposure to all this stuff. So one of the positives of going to those data rooms was learning a lot about different basins.
But that gets kind of repetitive
It does.
after a while, doesn't it?
Yeah, I mean, a lot of people in the industry call it deal fatigue. I mean,
Okay.
we looked at hundreds of deals, and it's just kind of part of it. If one doesn't work, you got to move on to the next one.
You got to start from square one and
Yeah,
do it again.
you
and
can't
do
just
it again.
you can't just be like, let's pay up for this one because I'm tired of looking at deals.
No.
You got to find the right one.
Yeah.
And you know, being the high bidder can sometimes, you know, bite you. So that was a super interesting team to be a part of, because we had, you know, our leadership was deep in finance and private equity raising. Had a good engineering team too. So good leadership to learn from. And that was really kind of one, I would say, kind of the most takeoff ramp up of kind of my career of where I wanted to go.
Okay.
I wanted to go into evaluations. I wanted to get closer to the business side, but I wouldn't have gone there or been more excited to go there without kind of the operations base that I had,
Okay.
in my opinion. So after we had acquired something at Encino,
Well, why? I mean, is that because you understand both sides of the deal?
I think so. I think just having the operations base made me feel like, as an evaluations engineer, I knew more about evaluating deals than an evaluations engineer that hadn't had an operations background.
Okay. Okay.
Had. So I feel like I had a little bit of an advantage.
You understood more of
Yeah.
what was going on. You could ask questions more. That was kind of
And paying more for an asset that someone else is not considered winning, right?
right.
I mean, just because you pay more, I mean, you could overpay for it, and that's a problem.
Oh yeah.
But I felt like I had a really realistic view of assets when we looked at them from an operations standpoint, from an evaluation standpoint. I thought that was super important. So basically, we made this large acquisition. We became a really large company in Encino, and, you know, love the people I work with, but I just kind of wasn't. I wanted something else.
Okay.
I wanted something a little more. I loved the A&D side. I wanted to stay on it, and I kind of wanted to get in that group at Encino, but we were kind of taking a break on the A&D, obviously, because we just acquired this monster asset.
Right,
And
so-
you could go from Chesapeake, so it was time to buckle down, take care of that asset. Maybe we do A&D a couple years down the road.
So you were really enjoying this A&D
Yeah.
component of it, and next thing you know, it's like, oh shit, we're not gonna do this for a while now.
So now I'm back in kind of asset development, kind of siloed again, type atmosphere. And after being on a 20-person team and wearing so many hats,
Yeah.
I was back to wearing one hat again, kind of deal. And I was kind of feeling in a cave. I wanted to, you know, I kind of wanted more.
Right.
So I started to look into A&D advisory, banking, stuff like that, and interviewed with, you know, a few banks. Ended up landing with Dietrich Energy Advisors,
Okay.
A&D advisory firm that focused more on deals in the 25 $100 million range. And I kind of thought about it. We discussed this earlier, and I thought about, if I go into this and then I come out and I go raise money on my own or start a company on my own, I'm not going to go and be raising $300, $500 million.
Right,
I'm
right.
a 30-year-old, and no one's going to give me that kind of money. It's crazy. But it's realistic to come out and raise 50, 75, and go do these little grassroots type acquisitions, and that was where Dietrich kind of focused.
So it was more in line with your kind of with your medium term goals.
Totally.
Yeah.
Totally. And so it gave me a huge network of potential buyers that were looking at deals that we were marketing. Got a really good grasp of what buyers keyed in on assets of this typical size. And also at the same time at Dietrich, and I hadn't done much in this just purely kind of mineral space. At Dietrich, we marketed a ton of mineral deals.
Okay.
So it opened up this whole new network of I didn't even know they were just pure mineral buyers.
See, that's the thing, though. I mean, you came in here I'm a novice when it comes to that side of the business.
Sure.
I really am. So this is kind of something new to you too at the time.
Yeah. No, absolutely.
All right.
Absolutely. And I kind of saw it as I had kind of grown at Dietrich and had kind of done more mineral evaluations and had marketed more mineral deals. I was kind of looking at these mineral buyers and realizing, this is every team was very lean. You don't need, a huge administrative team or G&A team to run kind of a pretty big mineral portfolio.
Okay.
You obviously don't need drilling engineers, production engineers, operations engineers. We're not subject to any CapEx or OpEx. You're literally just going out, the end buyer of minerals. You're owning it in perpetuity, and you're trying to put a decent underwriting case on what you can value these minerals at in all sorts of different basins. And I kind of saw it as, it may not be as high of a reward if you were to go raise money from your typical PE firm. That's a bunch of undeveloped leasehold. Go drill a few wells, put a few tracks on them, and go flip them to a public company that'll pay a premium for it.
Man, but you're not seeing that
You're not.
anymore. I mean, so what year was this?
This was really at the end of 2019, beginning of this year.
So the whole buy acreage, drill a couple holes and flip it,
Sure.
for 3, 4 times, 5 times the price. That wasn't happening anymore.
Yeah. I mean, it's not because of what portfolio companies of private equity firms were capable of doing. It was what the buyers of these typical assets were capable of buying. They didn't have Wall Street wasn't rewarding public companies to go spend cash on buying undeveloped leasehold from private equity companies.
Right.
So the exit was becoming a lot more difficult. So this just kind of led me into, kind of got introduced to this team at Momentum, young, ambitious team.
Small group?
Small group,
Okay.
15, 16 people.
So you kind of like working with that small group.
Yeah.
Yeah.
I do. And I just like, as I mentioned earlier, kind of wearing a lot of hats.
Yeah.
There's different administrative things that you never thought that you were in charge of doing, but you're in charge of doing now. So you get way more in touch with literally, back office, anyone that's working, IT consultants, all sorts. You're in the nitty gritty of setting up your, hardware and your software for what you're trying to do.
So you're actually learning how to run a business.
Absolutely.
Yeah.
Yeah, absolutely. And I find that super rewarding.
And some people don't. Some
Yeah,
people honestly
that's
like
fine.
going to work, clocking in, doing their job, being whether it's a drill engineer to
Totally.
their career, or whether it's whatever. Some people like that stability of a larger company.
Yeah, absolutely.
And don't want to wear different hats. Don't really give a shit about IT or anything like that. They just want to go in there, do their job, and go home. But someone like you, you kind of like that exposure to the whole business side of things. Okay.
Yeah. So I started there in March. It was literally, days after kind of COVID started to be more of kind of a lockdown situation versus kind of just the headline.
Oh, you started like right before, right around COVID?
Right after the OPEC crash. Right after
Really?
Yeah. So.
Oh my gosh.
Which
how'd you feel about that?
Mixed emotions. From a first glance and from one perspective, I felt really fortunate that I just landed a job.
Yeah.
With a company that is a little more shielded from kind of the repercussions of stuff like that happening.
But also no one, I mean, it's when COVID first
Sure.
started, all this, lockdown
Yeah.
and all this shit. No one understood, I guess, the impact and implications
Sure.
of what was kind of coming down the road.
Sure. I mean, when I started, my first day was at home.
Yeah.
My first day was at home. And
Okay.
we were basically at home until, I think we started kind of slowly creeping back in, 50% of the office. And
Well, how was that working for a team when you're at home? I mean, it's your first kind of week on it. I mean,
Yeah.
To me, I like getting to know who I'm working with. You know what I mean? To me, relationships are important, networking is important. So it's like, how was that for you? I guess your first
Sure.
day on the job, you're at the house.
well, and that's one thing I like about a small company. The interview process, I met basically everyone
Okay.
in the company through 3 different interviews and a dinner.
Okay.
So it wasn't like people I was interacting with as I started from home were people I had never met before. There were maybe a couple that I hadn't met, but for the most part, I got to know the people I was working with
Okay.
by the time I got hired.
Okay.
So that made it a lot more comfortable. But yeah, I mean, I started by basically just going, picking up my laptop, coming home, and downloading all the necessary softwares I needed, and talking to third-party IT and all that good stuff. And it was actually a great time. Deal flow had kind of slowed down at the time, and kind of gave me time to settle in. One spot that we were really trying to hone in on, look at was the Midland Basin. So I spent a month and a half kind of combing through the Midland Basin and finding out kind of where we wanted to go buy minerals.
So what, I mean, I was, what, this kind of, because I'm so a novice when it comes to this stuff. So what would, the tools that you had to come into this new role, was it your previous experience, was it, production completions, or was it actually when you were at Encino going to these data rooms and actually looking at this stuff?
I mean, honestly, it was all of it combined.
Okay.
Honestly.
Okay.
So, going and looking at the Midland Basin, and basically trying to build out, sections of different counties of where we want to look, what well results look like.
Yeah.
What wells are parents, what are childs, what wells have been co-developed, what completion designs, how they've been produced. All that comes from operations experience, A&D experience, evaluation experience, baking experience. I mean, all that into one
So
was
everything-
now what I was doing.
So everything is kind of in your
Yeah.
toolbox, that everything you need. Okay.
Yeah.
All right.
So I think that helps a ton, and especially in a time like this, where you've got rig count dropping, and we're trying to value minerals and say, hey, there's probably 8 locations left on this mineral acreage to drill. When is this stuff going to get drilled? Because that's the value of what we'll do.
Okay.
If it's drilled next year, or if it's drilled in 5 years or 6 years. So, you look at the operator, you look at how much acreage they have, you look at high grading their acreage. Where is their best acreage?
And it has to be drilled for y'all to make revenue.
It does.
Okay.
I mean, most of the time we don't buy completely, undeveloped acreage where there's no producing assets at all.
Right.
But at the same time, yeah, we do buy, minerals that are not producing, and basically the way we value them is when are they going to get drilled, how many wells are going to get drilled, and how many reserves are they going to produce. So, building a type curve for whatever benches you think are going to get developed every time, and at what time, basically drives all the value of the mineral acquisition. So, using kind of all my previous knowledge is kind of what I'm combined into one is what I'm doing now, and I feel very comfortable with what I'm doing. Very young, ambitious team, and it's been a lot of fun. I definitely miss drilling wells and doing workovers and stuff like that. And,
You think you're going to go back to it?
I mean, if someone,
Well, I mean, obviously, you can't never say never, but I mean,
never say never. I mean, if the opportunity comes down the road where I'm needed and someone wants my operations advice, sure. But I think I am getting more in the mode of how to run the business, and when I have operations engineers I work with, I can speak the same language as them,
right.
and we can both talk out what I think is the best plan. Obviously, they're going to make the downhole decisions more so.
But at least
And
you guys are talking the same
Yeah.
language.
Absolutely.
You know what I mean?
Yep.
At least y'all are communicating on the same,
Exactly.
level where they understand what you're talking about. And they,
Right.
Yeah.
Exactly. And so, yeah, that's kind of brings us to where we are now. That was
Where we
a
are now.
pretty long-winded background.
Well, thanks for joining us, and everyone's Preston Peeples. No, let's talk about what's going on right now. I mean,
Yeah.
So we kind of, this is one of those things where we kind of threw together a podcast. But I mean, right now during this week, I mean, we're recording this in the middle of October, and we're in this world of consolidations.
Yeah. Yeah.
You got Chevron, no.
Yeah.
You have Conoco and Concho that was just announced this week.
Concho.
Conoco, and now there's
Pioneer and Parsley.
I'm trying to think of a name for that, but I can't. But yeah, Pioneer and Parsley. But anyway, it's kind of all over the board right now. You're seeing a lot of consolidation, a lot of good talent out there right now that are kind of being squished together. And you know there's going to be a reduction in G&A. You know there's going to be a reduction in headcount.
Yeah.
So I mean, what are your kind of where do you see the industry going right now?
Yeah, I mean, you can start back and when I was graduating in 2010 and why I even probably got a job in this industry, as booming as it was when I got out, was public companies at the time were being rewarded by analysts and banks on Wall Street that had no idea how to develop shale asset. Right. So they're rewarding executive teams for growth, at honestly whatever cost.
Yeah.
And I think probably, at the time, I can't speak because I wasn't in their shoes, but executives were probably like, really? We're like not actually profiting anything.
But you're going to keep on giving? Okay, let's do this.
So like 10 rigs, even if we lose $400 million, you just want us to grow. And they're like, that's all we want, production goes. Okay. So that's what public companies were being rewarded for.
Right.
And to do that, public companies were hiring like crazy. When you're running that many rigs and that many completion crews,
you need
got
people.
That many wells coming online, you were hiring like crazy.
Yeah.
So it was always an overhire from the start.
Right.
But fortunately for me, I'm glad it was. Because I got hired, that's how I got into this industry, that's how it's evolved. But obviously a complete paradigm shift is happening, and the whole shale revolution has made oil price super volatile. Because shale production declines super hard, it increases very drastically when a bunch of rigs are running, so like supply is moving up and down way more than it kind of ever has.
Right.
So that's kind of what's kind of led to this volatility over the past 10 years. We've had two huge price drops in 2015 and now. I think within a 10-year period before that.
And we didn't recover from. We didn't recover from 2015.
Yeah.
You're seeing. You're right. You usually hear these boom to bust. 8 years.
Yeah.
Or 5 to 8 years.
Yeah.
Now it's kind of back to back.
Right. So you've seen the public equities over the past 2 years just get absolutely crushed.
Yeah.
If anyone that owns stock in a public E&P knows exactly what it's been crazy. And now Wall Street analysts and banks are rewarding, okay, we just want free cash flow.
Yeah.
Which is not ramping up, taking on debt, putting out a bunch of rigs and just growing production.
Free cash flow was a huge buzz term in Q4.
Yeah.
Q3, Q4, 2019.
It's profit. It's not revenue.
Yeah.
Basically, people were focused on revenue.
Yeah.
And now people are focused on actual profit. The capital.
You run a business for profit?
I know. It's crazy. It's lame.
All right, let's pause. Let's get back to this.
It's not as fun.
Yeah, let's put that on the back burner and get back to that.
Yeah. So obviously now you're seeing these larger E&Ps try to consolidate. They're obviously buying a huge amount of production and cash flow that comes with these companies, cutting a bunch of G&A, which is a total sour part of this entire paradigm shift. Is you're going to see so many good people that are going to be without jobs, and probably there's not going to be a ton of jobs that are going to come up. So the way that that's going to play out, I don't know. But you're going to have several people leave the industry.
I think you're going to have a bunch of people leave the industry.
Yeah.
Which, honestly, we had podcasts before, we had discussions before where that's not necessarily a bad thing.
No.
If you're relying on chase and rig count, and that's how you're finding it, or you can kind of venture off into something else and kind of be a little more stable, be a little more happy, and be a little less stressed.
Yeah.
You're gonna see an exodus of people in our industry. I feel like. And you're seeing that today with all these acquisitions, consolidations.
Yeah. And I think it's honestly, it's all going to kind of come full circle, because as like Conoco acquired Concho, Pioneer acquired Parsley, there are going to be parts of that acquisition that the acquirer is not going to want, or at least be able to focus on from an asset and acreage perspective. So I think that again is going to open up more opportunities for private equity to enter the space again, buy those assets that the bigger companies just can't focus on.
Okay.
It may be 5,000 acres, 7,000 acres, but to a private equity firm and a small management team, they can go drill that up and put a lot of value on it.
Absolutely.
Quick. So I think eventually that model could come back. It's going to be much more of a longer term type deal. because you're not going to have the acquirers that are going to come in and buy that stuff from you super undeveloped. You're going to have to develop it yourself. You're going to develop it within cash flow, and you're going to have to live with, the outcomes of that. But hopefully, in this wave of consolidation, my hope is that oil price itself, not necessarily whether it jumps or comes way down or whatever, is just going to be a lot more stable.
Okay.
Because, hypothetically, you've got 400 companies drilling wells in the Midland Basin right now. If oil price goes up to 60 and each rig, or each company, goes from 1 rig to 2 rigs, you've got, 400 rigs going to 800.
Right.
When you've got 100 companies, not all of them are going to have the capacity to get to that 800 number that may have been previous with 400 companies. So I don't think that oil price swings are going to increase production as much as they were in the past. People aren't going to, and also you've got oil field service companies right now that have rigs and completion, equipment that's mothballed.
Yeah.
You're not able to just put that stuff back into service immediately. It takes a lot of money and maintenance capital to do that. Oil field service companies aren't going to do it unless they're getting, asked, and whether it makes sense from their perspective to make
Right.
money as well. So I think it's going to become a lot more of a stable environment as far as price. And I know what question you're coming to.
No. So no, I kind of like this where this is going. So you're kind of an optimist when it comes to the oil and gas industry right now, how it's going to pick up as be more stable.
Absolutely.
Interesting.
Yeah.
Okay.
I do. And I think one of the really important things in this whole Conoco merger that just happened is what Tim Leach said, which I think was kind of a cat out of the bag, is he said, our corporate production decline rate is 40%, and that cannot support the dividend that we are trying to pay out to our investors. And coming from a company like Concho that has what people, the core of the core, acreage in the best basin in the United States, their annual decline rate of their production is 40%, even when they're running X amount of rigs. So it's pretty eye-opening to the public market and to investors and everyone else on when rigs drop in the United States. I don't think people would really actually realize how much production is falling off without new shale wells coming online. So I think the supply side is very bullish and promising as far as where supply is going with the amount of rigs that have dropped in the United States. Now, of course, COVID, it's very hard to put the demand kind of side of that equation.
That's tough though. I mean, that depends on so many different factors.
Oh,
I mean,
sure.
when's the airlines gonna, when's the borders gonna open back up? Is it gonna be a vaccine?
Sure.
I mean, there's a lot of different factors behind airline international travel.
Sure.
Right now.
Sure.
And you're right. Right now we're at a lull.
Yeah.
We're in a standstill.
Yeah. And what my hope for this kind of consolidation wave that is only getting started, I think maybe once a week, maybe once every 2 weeks, these kind of announcements are going to be happening over the next year.
What now? These big.
Yeah, these big mergers,
Okay.
big consolidations. There's just too many companies out there. There's no reason for that many companies to be doing the same thing.
Right.
It just doesn't, make sense profit-wise, especially at this price. So my hope is that we can have a commodity that stays within an economic level of 40 to 40 is pretty low right now. Demand needs to come back, but maybe 60 to 80 bucks, and it stay there longer term rather than going to 150 and back down to 10 every 5 years.
Yeah.
And I think that's what's happened with the rush of so many companies being built and public companies being rewarded for growth, only growth, and that's it. Now it's a whole different ballgame.
Well, then you got private equity companies throwing cash at these small little independents, and
Sure.
them picking up rigs. I mean, there's tons out there, or
Sure.
was out there
Yeah.
at the time.
Yeah, totally. So I mean, it's a whole new ball game, but our industry and the people that work in it, I've never worked in another industry, but I'm privy to kind of how the fundamentals of other industries work, and our industry is incredibly adept and nimble, and can react to stuff like this very positively. Technology is going to become, it already is, just an absolute huge driver. In this
You're
area.
hearing that so much lately.
And it's not just a cliche or buzzword. I mean, back in 2015, when I switched out of completions to production, we were, completing wells in the Bakken
Yeah.
with, the max amount of stages we could put in the ground in these open hole systems were like 30 stages in a 10,000 foot lateral. Now people are putting 60 stages in the ground and double the amount of sand and all this, the technology has, I almost feel like a dinosaur with the completion designs I was putting in the ground.
Really?
Back in 2015, yeah. Yeah. And we were just becoming like, trying to do cost savings wise of getting off, high strength ceramic proppant, which no one in the world pumps anymore, to sand. And that was hard enough. And now it's just going total sand, just like tripling the amount. So it's just, it changes every year, and it changes quickly, and it changes drastically.
Well, how do engineers and how do us as an industry stay on top of these technology advancements?
It's super. People are constantly trying to do different tests, and the important thing to do is only turn one knob at a time.
Right.
If you turn four, how the hell are you ever know which knob worked? So it takes time, but I think people are getting to the point with technology and kind of shale itself becoming, as much as I hate to say it, statistical, very much a statistical play.
Okay.
In many parts of the world, as much subsurface technology goes into it, statistics are a huge part, and that's what's becoming a huge driver in how companies make decisions is off statistics and data.
You're hearing that so much these days.
Yep.
Technology and data.
I mean, like, as a petroleum engineer coming out of college right now, if you know Python, coding, how to build out databases, I mean, that alone is worth its weight in gold. As much as it is, being a subsurface guru. So, I mean, it's just, that's how that's what I kind of allude to.
But you sound pretty positive, through all these consolidations.
Yeah.
Right? Through all these, I guess the restrictions, you sound pretty optimistic on the stability of oil prices.
Yeah.
Something you don't hear a lot about. I mean, you go on LinkedIn right now and see articles saying oil prices will be at, $150 in, Q2 2022, or it's going to be $20 for the next 10 years.
As much as I would love $150,
Mm-hmm.
if that were to happen, and we still have as many companies as we have right now, okay, that just rescues everyone out of distress and debt.
And all you're doing is prolonging
the death of a lot of these companies. And
people don't like talking about the negative, bad news side of it, the scary side of it, the real side of it. You know what I mean? The layoffs, the consolidations, the companies going away. I mean, people don't like discussing that.
Mm-hmm.
But I mean, that's happening everywhere, whether you like it or not.
Yeah, absolutely.
I mean, that's just the way the market's going.
Yeah, no, totally. And I mean, obviously the sour side of it is there's going to be a lot of jobs lost. I mean, every consolidation announcement that comes out is $500 million in G&A synergies. Well, that translates to layoffs.
Yeah, I know.
Every time.
You can't put lipstick on that pig enough and just say layoffs.
Yeah.
Just say layoffs. The synergies is, you're right. That's a great word.
Yeah.
It's a great marketing tool.
Oh, totally.
That's a good BBA term.
It is.
Synergies.
Yes.
Synergies.
Synergies.
So I guess getting through this. I mean, so we're going through the current. Let's talk about the current state of affairs. I mean, so let's talk about what's going on right now with everything. I mean, it's election year. I don't want to get into politics.
No.
I mean, I try to stay away from politics because I think that's a personal thing. I don't think we need to discuss it on the podcast. But let's talk about everything right now. I think right now we've discussed Facebook before, kind of getting on this rant about deleting it.
Sure.
I'm a huge proponent of deleting Facebook off your phone.
Yeah.
Me, I've been advocating that for a long time right now, and it doesn't make you as stressed, doesn't make you as us versus them mentality, or oh my god, look at all these problems going on in this world. I was talking to my mom the other day, and I'm like, yeah, I deleted Facebook like a month and a half ago. She's like, maybe I should try that. I'm like, yeah. I mean, you're constantly telling me how stressed you are with what's going on in the world.
Right.
I'm a proponent of deleting Facebook.
Yeah, totally. Yeah, I mean, social media has changed waves like just as much as the oil and gas industry has as far as paradigm shifts. I remember, 2006, or I was graduating high school in 2006, downloading Facebook and then like meeting your soon-to-be classmates at UT or who was moving to Austin and going to UT from different
See, I never had that experience.
Yeah, and so like that part of it was really cool and useful. But yeah, I mean, it's blossomed into something crazy, and as any other company does, you got to do something to make money. And Facebook found a way, through advertisements and through data mining and stuff, to be insanely profitable and become a multi-billion-dollar enterprise.
But you were talking about, would you tell me, you're like, have you ever tried to delete Facebook?
Yeah, no, I started the process and stopped because it takes about 7 days.
it guilt trips you.
Yeah, yeah. Are you sure
Hey,
you don't want to have
whoa.
this birthday post from 2008 from this guy you haven't talked to in 12 years?
Hey, buddy, this is your daughter
Yeah.
on her 3rd day on this earth.
Yeah.
You sure you want to get rid of
You're
this?
just going to delete her?
What do we say? It's kind of like cleaning out your closet with your grandmother there.
That's right.
It's like, you're going to throw that away?
Yeah.
No, I'll
That's
just
still
leave
a
it.
cute shirt.
Yeah, no, I'll just leave it
Okay.
a little bit longer.
Yeah.
It's so tough these days.
Yeah, it is. And I mean, I was telling you, like Facebook, I have some sort of notification in the morning, get on it and check, when, my friends' birthdays are and stuff like that. It's kind of a repository for my friends' birthdays. Other than that,
Are you a happy birthday bud poster?
no. If I
So
know,
so why are you checking birthdays?
well, if I know the person, well enough and I have their number, I'm going to call them or shoot them a text. I'm not going to put a Facebook post on it.
Okay. I usually text them and I say, hey, I just texted you. I don't need to post on your wall. That's
Correct.
That's my post on the
Yeah,
wall.
absolutely.
That's my
And I
post.
mean, I wish I knew all of my best friends' birthdays straight off my head, but not everyone. So it's nice to be reminded every now and then, and
So that's the benefit of Facebook, right?
that's about it.
Yeah, I agree. I honestly, I think it's a cancer.
Yeah.
Pretty much to what's going on right now, especially right now with the election and all that stuff.
It's incredibly polarizing. I mean,
No, it's an us versus them mentality on everything.
It's so easy.
Whether it's masks, whether it's Republican versus Democrat, whether it's this, everything is split.
It's so easy to disagree with someone just by typing a response.
Oh,
right?
it's black and white.
You don't have to
these
face
days.
them.
No, it's black
like
and
I
white
have to
these
talk
days.
to them. So, and I mean, you fall victim to that sometimes. You start typing something like, "What am I doing? This is ridiculous. This isn't
Oh,
going
I'm gonna
anywhere."
teach them something.
Yeah,
And you're
exactly.
like, what am I teaching them, dude?
And then once you make that post is there forever.
Yeah.
That's something to think about too, which is also why I don't like it.
Just like a podcast. It's there forever.
Wait, seriously?
Podcasts are there forever.
Oh, God, I would have never done that if I knew this.
No, I could take you down, but I'm a little bit too lazy. So let's get into the personal side of things. So when COVID's not happening, what do you miss?
Man,
By the way, I think there's gonna be listeners out there like, well, COVID's not happening, it's here forever. You know what I mean?
Yeah, no.
What do you miss?
Live music.
Live music?
100%. Yeah. I bet my wife and I, my friends, probably once a week, once every 2 weeks, did some sort of, whether it was at a bar with a small band or
Wide
music hall.
Yeah.
I know they're having, Shaky Graves and Robert Earl King back soon.
So I also saw they're having Major Lazer over at Wild Music Hall, but they have these little platforms.
little pots,
Yeah, like $695.
which anyone would pay for right now.
Which,
It's just,
dude.
I mean, right?
I think people honestly are dying to get it.
And
So you're seeing all these I was at lunch today and we're talking about these oil field tournaments. You know
Sure.
what I mean? Like people are missing, fin for a feather, they're missing this, they're missing that. And they're like, do you think it's going to come back? And man, you've seen, oil field helping hands, you've seen AAVE,
Yeah.
these events are packed right now. People miss these events.
100%.
They miss getting together.
Social interaction is such a key part of life. It's crazy.
It is.
I mean, it absolutely is. And I don't know. I mean, people put it in perspective. When I get in my car every morning and drive to work, I'm taking on more of a risk statistically than I am of dying from COVID.
Okay.
I mean, I know it's crazy hypothetically to put in
But your
perspective.
statistics.
But it's
Statistics.
yeah, it's all that. Life is about statistics.
I agree.
So,
I agree. So
Um,
live music you miss, huh?
I do. Yeah, live music is probably. I mean, that's shallow in the grand scheme of things. Of
Why?
I don't know. I mean,
What's
fortunately, I've been able to see my family through this. I mean, I know there's people that haven't been able
Oh,
to.
I'm not talking about. I'm talking about the simple pleasures, man. We don't
Okay.
get serious on
Well,
this.
I just want to be.
Or we can get serious.
No, I'd rather not.
Yeah,
Let's just
no.
stick
I
with
mean,
live
you can. Be, I mean, I think those little things. I mean, yet they sound shallow, or I don't even think they sound shallow, but
Sure.
you say they sound shallow, or not important.
Yeah.
Those things are important.
That was a huge part of my life. Huge part. I mean, your social life should be equally, if not more important, than your professional life.
I agree
And,
completely.
my social life makes me enjoy my professional life because I work. I work to go enjoy the things in life. Right? Who doesn't?
Yeah.
And if you're not, then you've got the wrong. You got the wrong.
You're doing the wrong thing,
You're
buddy.
doing the wrong thing. Work hard, play hard is cliche, but it's real.
So live music. What else?
I mean, I'm glad sports is back on TV and whatnot, but watching the NBA or the NFL or these games with this
The fake
crowd
stands.
noise pumped in is so weird. I feel like I'm living on a different planet. Going to sports games, going to Longhorn games in Austin and stuff. But again, that's just pure social interaction. Being with your friends, going to see something together, interacting with each other. But those are kind of two kind of different events, live music and sporting events, that bring a ton of people together at the same time. Massive amount of people. And some people don't like crowds, but like, I love that kind of stuff.
Well, that's the thing. I mean, I'm not a huge crowd fan, but at
Sure.
the same time, I understand the getting out and
Sure.
being around people and
Yeah.
listening to music and being around your community.
Yeah.
You know, I mean, those things are extremely important.
Yeah, and I mean, before this, you know, you're kind of always in that, yeah, I'm an extrovert, but man, I love introvertedness. You know, like, I love to, you know, be myself and or, you know, kind of be sheltered from that stuff too. But this has way more made me realize that I'm way more extrovert than introvert.
Well, man,
100%.
I'll tell you one thing. Through all this stuff, I mean, it's yeah, I'm an extrovert,
Yeah.
obviously.
Oh, I know.
And we know. I'm an extrovert, and it's kind of one of those things, like, you get so comfortable being at the house.
Yeah,
And like, if you have like a double date or something like that, where your wife's like, oh god,
Yeah.
let's stay at home.
Yeah.
Like, you don't want to go, but it's like, no, time out.
Right.
Let's go. Let's force ourselves to go, because
Right.
you get comfortable doing the same routine over and over.
right. Yeah, and it's, I don't know. People say it's a new normal, and I just like,
I'm sick of that shit.
I can't quite accept that.
I'm sick of it.
yet.
You know what's gonna be normal? You know what's gonna be normal? This is my prediction. You're predicting a more stable oil industry, which
Yeah.
is probably the most shocking thing we've heard on this Around the Rotary podcast. But I'll bet the new normal is this. It's gonna be the illusion of safety brought on by fear.
Mhm.
You know what I mean? It's gonna be, you're gonna have servers wearing the masks from now on.
Yeah.
You know what I mean? You're gonna have, you know, these plexiglass shields at HEB or wherever you go, separate. Those are just, those aren't, they're not being taken down,
Yeah. No.
and that's unfortunate because, look, I'm not. People are saying, "Oh, COVID's real." I know it's real.
Yeah,
I
sure.
understand that it's real.
Absolutely.
But I'm just saying, the new normal, we will be living in a world that constantly reminds us of COVID.
Yeah.
Yeah.
Absolutely.
Yeah, it's not gonna be like the 1920s after the Spanish flu in 1918,
Right.
whereas the Roaring 20s, everyone was partying, hanging out,
Yeah.
and being close together.
Yeah.
This is gonna linger for longer
Yeah.
than a while because of social media and the news.
For sure. And you know, I joke around with my friends that, you know, at least, you know, COVID will be over November 5th.
You think so?
No matter what. Yeah.
You think
One way or another.
you think it's politically driven?
Gosh, yes.
Well, I think it's definitely driven by the news.
Well, for sure. Absolutely. But I just think in an election year, people have been enabling themselves to be more divided on a topic than ever before.
Oh my, it's so easy these days.
Now is the time to be divided.
Oh,
And-
it is.
And there's no intermediary opinions on things. It's white or black. It's just
There's no gray. There's no gray. Just like we're talking about the VP. We're not talking politics, but we're talking funny.
Oh yeah.
We're talking about the VP.
The fly.
The
Fly
debate.
Pence's head.
And the only thing that I
Yeah.
knew what happened was the fly.
Yeah.
You know, you wake up the next morning, you don't watch it, you check the news, you go, oh, there's a fly.
And then
That's it.
the deep meanings of what that fly meant.
What do you mean deep meanings?
Oh, I don't want to get into that.
Get into that. No, get into that.
Oh, I don't even. It was on Facebook.
Okay, well, these aren't your opinions, but what are the deep meanings of this fly?
I mean, you know, there were deep meanings out there about the fly attaches to demonic objects. You know, that demonic object was Mike Pence.
Oh.
So it leads you to believe that Mike Pence is the devil.
This sounds like science.
It is. Statistics.
Statistics. This sounds like data. No, but it's funny. It's like we live in a world where it's like there's these debates going on, which I don't really. I mean, it's kind of to me they're bullshit debates. I mean,
Yeah.
it's kind of ridiculous. But I mean, there's all these debates going on right now, and the one thing that people focus on is a fly.
Yeah.
You know, it's
I mean,
not.
that's
It's not healthcare. It's
They're not
wages,
debates.
it's not- no, they're not debates.
they're not debates.
They're not.
This is the wrong term.
So you're over it too, huh?
Oh yeah.
Dude, I've been over it.
Yeah.
I've been over a while
But
now.
hey, as long as COVID's resolved and we have a stable oil and gas industry, I can get by with whatever.
I will take anything with the stable oil and gas industry
That's right.
right now.
That's right.
But you know what I mean? I'm having fun. I mean, to me, I think it's important during these times to we talked about networking earlier
Mhm.
before we started recording,
Sure.
and how important it is.
Yeah, absolutely.
And to me, I think this podcast and being here at CPC is amazing because I do get to network. I do
Yeah.
get to talk to people. I do get to hear different perspectives and different points of view.
Yeah.
And right now, with everything being, locked down, or you can't go to customer's office, stuff like that, like, it's kind of limited the
Yeah.
networking capabilities.
Totally.
And I've enjoyed, I mean, you have to make your own enjoyment,
Mm-hmm.
and I've unplugged from the news, I've unplugged from social media,
Congrats.
well, I mean, I'm still on this stuff,
I
I
know.
don't check it
I know.
all the time. But I mean, I've unplugged, but at the same time, I'm focusing on what's inside my house, I'm focusing on the company, I'm focusing
Sure.
on my friends,
Totally.
you know what I mean, my customers. And I through that, I've had a good time.
Yeah. No, you're absolutely right. I mean,
How are you dealing with the stress?
getting by. Getting by.
That's,
But you're right. I mean, the closeness that you become with, your really good friends, your family, what you really want in life. I mean, it has given me more time to think than I've never wanted this much time to think. Never
Yeah.
thought about it, but this has definitely allowed for that, and in every aspect of life, business but for where you want to go, how you want to treat people, how you want to be treated, and what circles of friends and people and business and network that you want to be in. And I think on the other side of this, what's going to come out is going to be a super positive thing if you've treated this time, constructively.
yeah.
And so, every crisis, achievement, outside the spectrum of life, as long as you can take something constructive out of it and turn it into something better, throughout life, that's what these times are all about. And
I mean, that's how you look at it. You look at it, it's not glass half full, glass half empty,
Sure.
but it's like, look, this sucks.
Yeah.
This sucks for everyone.
Yeah.
Everyone, not just oil and gas, but everyone. Just,
Sure.
what are you going to do? What do you do about it?
No, we can't just be like, oh, only our business is suffering.
No.
That is not true. Not true at all.
Hotels, bars,
Oh my gosh.
everything.
A
Every
restaurant
service,
owner,
every
just-
service industry.
You talk about margins.
Yeah.
Oh my gosh. I mean, even, you hear restaurant owners talking about, oh, great, we're opening back up at 50% capacity. That's not going to cut it.
And I'll tell you one thing, restaurants need to be open at full capacity. Look, I'm not telling,
Sure.
God, don't take this as a political
No.
podcast, because it's not. But in order for restaurants to get back to the level that they were, 'cause no one likes going to restaurants anymore.
Sure.
The service isn't there. You're always constantly reminded of COVID. I mean, there's hand sanitizer on the table. There's masks here.
That's right.
The food quality sucks lately.
That's right.
It does.
Yeah. Well, I mean, they can't keep up.
They can't keep up.
They're
So-
not going to spend, the top dollar on quality either, because it costs a lot, to get, whatever they're sourcing their beef or their seafood.
I mean, I sound like a fat ass. I'm like, oh, I just want food to be good at restaurants. No, but at the same time, I mean, this is more about supporting people as well.
Yeah,
Like,
absolutely.
you want to go out, enjoy your time with your friends and family at a restaurant, and
Yeah.
they can't operate the way
Yeah.
they were.
I mean, and you're asking what do I miss most? Big group dinners and out on weekends and
Oh,
stuff.
dude.
That stuff. So, and then, a big group dinner typically leads to a big live music event or something. All that combined, missing that is like, it almost can't even remember how it felt. When you were,
No, you're right. Now you kind of got these. I mean, there, and you always gauge your. I mean, there's friends on every spectrum. You know what I mean? As they should be. It's a personal choice.
Yeah.
You know what I mean? But there are some people that are so reserved, and I'm not knocking them.
Yeah.
That's their choice. There are some people that are so reserved and stressed out about the current state of affairs that's going on.
Yeah.
You know what I mean? And it's trickling down to their children.
Sure.
To the point where the kids are waking up in the middle of the night, washing their hands and going back to bed.
Yeah.
They're worried about playing with their friends, and I'm talking about like 5, 6, 7-year-olds.
Right.
Playing with their friends, and it's you need to think how to regulate that with your family
Totally.
and your friends.
Yeah. And I mean, I don't have that variable in my life to, kids and.
Well, first off, my daughter's not doing that. I'm just telling you that
Well,
I've
no,
heard
no.
of this from other parents.
For sure, yeah. I mean, I've got nieces and nephews that are in that age range that during this whole time they have no idea what's going on. Why can't I see my friends? And then their first day, back at school, my sister-in-law sends a picture of my nephew. His first day back at school, he's got the biggest smile on his face I've ever seen him play. I mean, it's just like interaction. For not only adults, kids, social interaction is such a huge part of development and being a human being, and it's just that part that's lacking from our lives right now is, I don't know if it's something you can ever get back. For some, this gap in interaction is going to leave a lasting impact more than.
Man, I'll tell you one thing right now, and obviously I don't have the stats or anything like that, and don't think I'm speaking the truth because I'm an idiot.
I know.
All I'll edit that part out. I'll voice you over and be like, no, JP.
I'm not fact checking everything.
Say JP, you're a genius.
JP, you are a genius.
All right, I'll put that over what I just said. No, but I mean, at the same time, it's like there's so many different there's so many different other sides of what's going on right now. That's unfortunate. You know what I mean? Not to be negative and all that stuff,
Yeah.
but I mean, alcoholism, drug abuse,
Sure.
domestic abuse, suicide rates, all this stuff. I mean, so you're talking about this gap in socialization. I mean, it's one of those things where it's like, at the end of the day, I try to view life not living in fear.
Sure.
Live it in bewilderment, if anything. Live it with awe. Don't live it. Wash your. Look, we're talking about we're talking about simple stuff. Since we were 3 years old.
Yeah.
Wash your hands.
Yeah.
Cover your mouth when you cough. Do simple shit like that. You know what I mean? Don't lock. I mean, I'm not telling people what to do, but don't lock down and
Sure.
have your kids wake up at 2 a.m. to wash their hands because they are feeling distress from parents.
Yeah. I mean, if what comes out of this is more people wash their hands, and every time I go on an airplane, I get a sanitation wipe, and everything's cleaner. Okay, great.
I'll take it.
That's how it should have always been. But other than that, like you said, the constant instillment of living in fear is just so faulty.
You know where that's from, though?
Development.
That's from the news.
Oh, 100%.
The news pushes fear.
I know. Yeah. Well, that's what gets headlines. That's what makes money.
I advise people to unplug from all that stuff.
It's
Ignorance
so hard.
is bliss.
I know,
Ignorance
you're right.
is bliss.
You're right, but it's you've done it, so congrats.
Yeah.
But it's so much easier said than done. It's hard.
No, it's an effort.
Well, you try on this constant battle, like, where should my, because you still need to know what's going on.
Well, it's tough for me. I mean, think about it. I mean, I'm doing a podcast and I'm
Right.
not watching the news just because I don't want to.
Right.
You know what I mean? So it's a personal,
Yeah.
public thing.
Yeah. Yeah. I know. Unprecedented times, JP.
Preston, Peeples times. Well, Preston, I appreciate you got anything for me. You got any other tangents you want to go on? I'm down. Let's do this.
As long as you stay positive and test negative, JP.
Oh God, you're gonna drop that. If hope this email finds you well in these uncertain times. Yeah, I love that right now.
That's right. Yeah.
So anyway, do you got anything for me?
Man, I don't think so. It's just it's been great catching up with you.
Well, Preston, it's definitely good seeing you, man. It's been a
Yeah.
while. I think you were one of the first people that I started calling when I first got into sales.
That's right.
Yeah.
In the same building.
You want to tell the sampler story real quick?
Yeah, I wish we could remember the restaurant we went to.
It was some
I know.
shitty restaurant in
There's
North
no-
Houston.
There's no way it's about to go to.
So let me tee it up for you. You can kind of carry it on. So I first got into sales, and I met Phil Joseph, you, Gavin, Julianne,
Right.
and we all went out to lunch. And we're off of Rankin Road off of 45 in Houston. And we ordered one of these fried sample platters that I'm sure had wings,
All of it.
pickles,
Just
everything.
a huge
Just
bowl of
everything.
ranch dressing.
And we're disgusting. We're eating it.
Yeah.
Right? We're eating like it's pre-COVID. Like fingers touching everything. We're just chewing
That's
it up.
true.
We had probably like,
Do you think about how gross we probably were?
oh, we were savages.
And then like that weekend I probably went to dinner with friends and went to a live music concert.
Oh my God.
I was probably more unhealthy than I am now.
I was literally, I think that weekend I was coughing in everyone's face as a joke. That's what I did.
Yeah.
Until COVID.
I don't doubt it.
So anyway, so we're eating all this stuff. So.
Yeah. And, unfortunately we couldn't finish it all. We probably could have. We were probably trying to be a little,
But we had our Texas steaks and loaded baked potatoes coming
That's true. Wait, was this Outback?
for lunch. It might have been
It
Outback.
was Outback.
Outback.
It was.
Great boutique restaurant, steakhouse.
Support Outback.
Support local.
That was Australia.
Well, we're all
Okay. Anyway.
human to the earth.
Yeah, so we had a little bit of the sampler batter left over, and JP was in sales and trying to get some business, so we put it in a to-go box, totally sanitized, I believe, and brought it back and put it in the break room with his business card on top of it. How many calls did you get after that?
None. So pretty much you're walking back to your office with like 4 bites out of like these chicken tenders.
I think I'm
like,
sweating. I'm probably sweating.
Three like fried pickles
Yeah.
in a card from JP. Is
Yeah.
like, enjoy.
And you know what? By the end of the day, it was gone.
Well, I'll bet it
I
was.
guarantee
I'll bet it
you.
was. People miss breakfast. Right?
That's one thing I do miss about operations, is the food coming into the break room and seeing what would happen.
I'll tell you one thing. I'll tell you one thing right now. Those old days of breakfast runs.
Oh my
those,
gosh.
that way to connect with customers, I don't think that's going to happen anymore.
Just stand with a cup of coffee in the break room and people come in and out at 7
Those days are gone. How do you think people are? How do you think people will cold call?
I don't know.
Customers these days.
I don't know. You would know that better than I would.
Well, I'm asking you
I don't know.
from your side of the table.
That's for you to figure out.
Okay, well, stay tuned.
That's your goal.
Tune into Around the Rotary to find out how
Podcast is the way to do it.
podcast.
But I do. I mean, seriously, like, part of that experience working for a big E&P in operations is, whether it was you or there was a wireline guy that would come all the time, walk in there and get your cup of coffee before you had our ops meeting at 7:30 a.m., get a big cup of coffee that wasn't even good, get a cold breakfast taco.
You miss that stuff.
I miss that.
Dude,
That was fun.
I miss walking in, just like seeing like, oh god, these guys.
I know.
Just like hanging out, and you hear the stories about, fishing here and this.
Oh.
How to make the proper route. You put one bill on the hill, one bill for yourself. Like, you hear all this shit.
Once hunting season started,
oh god, you
hear
hear
people
stories.
Oh,
yeah, it was a 30-foot deer. Yeah, you hear all this stuff.
It was so good.
Yeah. But I mean, those stories, I wonder how they're going to get back around because, look, I know we're in the new oil field right now, or it's going to be the new oil field and all that stuff, but I would hope that there's some reminiscence or there's some dust from that side. The sitting around and just bullshit and get to know someone and just talking to people about whether it's hunting, whether it's whatever. I miss that.
College football, those kind I miss that for sure.
Yeah, I'm kind of curious if that's going to be the way moving forward or not. And if it's not, what's going to replace that?
Yeah, I think it's irreplaceable. I think it's going to happen again. Let's stay optimistic.
Let's stay optimistic. All right, so again, everyone, this is Preston Peeples, the VP of Engineering of Momentum Minerals. Probably the most optimistic guy we've had on the podcast, talking about stable oil prices and being around. What's the range you got?
Well, I'll give you a floor and a ceiling.
That's okay. Yeah, that's a range.
Well, yeah, but okay.
Sorry, I didn't use the business term. Go on.
No, it's fine. So take it a year from now. Let's call it a year from now, and let's just give it one gas price and one WTI price. What we're going to be at in October of 2021.
Okay.
You got your pen? You write it down.
I'm literally writing this down.
Okay.
What's the floor?
No, I'm going to give you just one.
Ooh.
I'm going to give you the price. I'm calling $65 WTI.
I feel like we need like an OnlyFans for this podcast. 61?
65.
65?
65
okay.
WTI.
So if you're listening, stay in the oil field, okay?
And $3.50 gas.
You know what? I'm going to ask you why, but we don't have to get into that.
I just see promising fundamentals of it. And
you know what? What else are you going to do? Talk. What are the fundamentals behind 65 and 350?
I don't have an equation to get 65 and 350. If I knew what the price was
Give
going to
us
be,
your hunch.
I wouldn't be talking to you right now.
I wouldn't be talking to you.
I wouldn't be.
First off, I wouldn't have you on.
I wouldn't even know you.
I would delete you from Facebook if I was on Facebook.
Oh, don't go there.
I would.
What, you would delete me before you deleted Facebook?
That's how I would do it.
Okay. You're breaching over some rough waters.
So what are your fundamentals
Okay.
on this?
So
By the way, every tuner that tuned out
they're
on
missing
this
something here.
podcast, like,
Because of all the tangents.
oh man, I shut it off. I'm like, wait, you didn't get to Preston People's fundamentals?
Yeah, they're
why
all
oil's
like-
be 65 and gas be 350?
Yeah.
No, it didn't. Well, that's in the last 2 minutes 50 seconds.
So COVID will be over November 5th. So we'll start to see demand creep back up.
Okay.
By that time, over a year, we will start to realize the declines from the rig drops.
But wait a minute, time out. You're talking about demand. You're talking about COVID being over November 5th, but pump the brakes. It's also global.
Correct. So I'm talking about when COVID ends, I'm talking about demand coming back up, airlines.
But COVID's not ending.
Transportation. Yeah, November 5th.
Well, it's going to still be. But you're talking about the hype.
I'm talking about, okay, like not, being outrageous.
The attention towards
Yes,
it.
there will be
A different thing.
There will be a vaccine. There will be something that will.
Or there'll be a different fear.
There will be something that will alleviate the fears of COVID-19, which will bring consumer spending back into the economy.
It'll be a new fear.
Is that a good way to put it?
That's a good way to put it.
Okay. So from a year from now, I believe that gap of supply and demand right now will cross again. And I believe we will become, at that point, so many more mergers and consolidations will have happened. The ramping of rigs won't happen quite to the degree as they have in the past with price swings. And I think we'll settle somewhere in that range. And with the decline in rigs in the biggest of basins of Permian, Williston, and Eagle Ford. We've always talked about associated gas and how it's crushed gas prices. With that big of a fall off in rigs in oily basins, associated gas is going to obviously precipitously decline as well. So you're going to see gas price
Precipitously decline.
precipitously increase.
Increase, I mean.
Gas price, yes. And so I see a more stable environment in a year.
Okay.
So
Well, there you
stay
have it.
optimistic.
Well, there you have it, everyone. I just learned where the oil and gas prices meet, and I learned precipitously. So I'm excited about that. Well, anyway, Preston, I appreciate you joining us. If you have any questions for Preston Peeples or myself, I mean, you can either find him on LinkedIn or reach out to myself. It's Round the Rotary at cap-petro.com. Again, that's Round the Rotary at cap-petro.com. Preston, I enjoyed it, man. And I'm looking for that $65 oil and that $3.50 gas.
Count it.
Let's just get through it, man. Let's just be positive, unplug.
Let's do it.
Stay away from the news.
Sounds good.
All right, buddy. I enjoyed it, man.
Yeah.
Till next time, man.
All right. Thanks, JP.